Hi friends and welcome to another video of Just Being Earnest. In today's video, we'll be talking about iFast's latest acquisition of a UK digital bank as well as the recent release of their fourth quarter 2021 results and their overall financial year 2021 results. So let us take a look at the iFast stock price for now. So at the beginning of the year, iFast share price was at roughly around $8.40 and right now it's at $6.33. So looking at it from a performance wise, the share price has dropped by about 25%. And now let's take a look at the updates regarding iFast. So some of the key summaries for the iFast financial results: the group assets under administration registered new records level, reaching 19 billion as of 31st December 2021, as a growth of 31.5% year on year. The AUA of unit trusts grew to a record of 13.89 billion as of 31st December 2021, which is a growth of 27.5% year on year. And due to the results of the increasing AUA, the group's recurring net revenue has continued to grow at a robust pace, increasing 35.6% year on year in financial year 2021. And in the next box below, the group's net revenue grew 31.9% year on year to 113.222 million in financial year 2021, while the net profit grew 44.8% year on year to 30.63 million in financial year 2021. And this reflects the positive operating leverage of the group business model. And the profit before tax margin based on net revenue increased to 31.6% for financial year 2021 compared to 29.6% for financial year 2020. And on 7 Jan 2022, the group announced its intention to acquire a UK-based bank from BFC Group's holdings, and iFast expects the proposed acquisition to contribute some startup losses in the beginning. And based on the group's 85% stake in the UK bank, its estimated loss to be for the group for financial year 2022 is approximately $4 million. And what iFast expects for it to achieve profitability for the UK bank will only be starting in 2024. And iFast expects its overall business to achieve robust growth in both revenue and profitability between 2021 and 2025, most of it coming from the Hong Kong e-pension division, which is expected to be the biggest driver from 2023. So this is a look at the chart for the group AUA, and you can see that it's on an uptrend from the beginning of 2001 all the way to December 2021. And this is the financial results for fourth quarter 2021 versus fourth quarter 2020. You can see that the revenue increased by 13.9%. And profit before tax only increased by 1%. And from an annual basis, for financial year 2020 to financial year 2021, the revenue grew by 27.2% and profit before tax grew by 41.1%. This is results overall for the group, and you can see from the year 2017 to the year 2021, you can see the revenue is on the uptrend, and you can also see that profit before tax is also on the uptrend as well, which is good. And this is the profit before tax margin for the group. And what we want to be looking here is to ensure that the margins is always on the uptrend. And this will help to reflect that the group is able to increase its profit at a much faster pace compared to the increase in revenue, which means that it's getting positive operating leverage. And here we can see the revenue coming from both the recurring and the non-recurring comparison. So ultimately what we want is for the recurring net revenue to be increasing faster than the pace of the non-recurring net revenue, because the recurring net revenue provides a more stable income to the business itself. So from a net revenue geographical wise, we can see that Singapore takes up the lion's share, and second will be Hong Kong, third will be Malaysia, and then fourth will be China. So from the year-on-year percentage change as well, we can see that Singapore is relatively stable at 30% for the year 2021. Hong Kong is second at 27%. Third, Malaysia is at 54%, which is good. And last, we have China, which is 37%, which is also good as well. So overall, from a group-wise, which is at the average of 31.9%, we can see that Hong Kong and Singapore is below it, while Malaysia and China is helping to provide the percentage growth. And this is update regarding the Hong Kong e-pension business. So we can see that the growth of the business is expected to start in the year 2023 to 2025. And then the e-pension business will be contributing the revenue from providing the operation and administrative services as well as the ORSO. And then these are the targets for the Hong Kong business itself. And this is the reason why iFast is looking to add the digital bank to the iFast fintech ecosystem. For they understand that with a digital bank, it can be run with a capital efficient, asset light, and scalable business model, unlike traditional banks which are asset heavy. So with a digital banks, it allows customers to deposit their money online, and it also helps to create the trust in the business as well. Because when the user is willing to deposit some money into your digital bank, it means that they are trusting you as well, and it also provides you a chance for you to make use of the cash as in your digital bank to be used for other purposes such as investments and other forms of money-making business. So this is just a summary of the proposed UK bank acquisition and some of the facts and the numbers involved. So the acquisition amount will be £25, and then is based, and the funds that's used to make the acquisition is based on the share placement to institution and accredited investors for the purpose of funding the group's proposed UK bank acquisition, and the group's raised a total of 103 million from the placement. So the reason why iFast business model is called the twin engine business model to me is because he has both the net recurring revenue as well as the non-net recurring revenue model itself. So for the net recurring revenue model itself, it's just like a bus itself, where it's stable and consistent, and you can enjoy your ride on the bus, which is expected to be smooth. And then at the same time, from its non-recurring business model itself, it provides the growth and volatility. So it's like being in the sports car where it's fast, but at times you also have to be slowing down due to the traffic, but it will help to provide some spurt along the way as well. So that's why I call iFast business model as a twin engine business model. So in the bad times, it's able to have the income from the stable and consistent business, and then in the good times, it's able to enjoy the growth. So like what one of my friends actually stated as a quote, so the only way to avoid being disrupted is to disrupt oneself first. So that's the reason why iFast is constantly reinvesting its capital into new products and businesses so that it doesn't get disrupted by others. And that's all for today's video. Hope you learned something new today. Do remember to make smarter financial decisions every day. Have a great day ahead, and bye-bye.